Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday market webcast. All right, so yesterday was Fed Day. We've been in this box forever. Monday, they tested upper band. They held it up there in the 4,200s. They brought it back in last couple of days. A nice little rejection below a ton of inflection points, which I will show you in a minute. We've now engaged the 50-day. We've engaged the lower band. And there's an opportunity here for the bears if they can break the low from April 26th down at 40.6875 to start to reach back down towards the 100-day and the 200-day exponential moving average, and you'd be talking about somewhere in the 40-30 area. Let's go right to the hourly because you can get a better picture of just all this traffic here. So you've got the daily midband, that's your green line. The 9-day, it's your blue line. Then you've got this, what is all that? What's all that shit, Mike? Well, you've got the monthly pivot. You have yesterday's pre-FOMC price, which is always important, especially right around FOMC. That's at 41.49.5. And then you have weekly pivot. All jammed in around 41.50, which is always a big deal. So what you had was, you had a hard break of it on Tuesday. You saw it in a very boring Globex hold as resistance. Then you saw the announcement, presser, into the end of the presser. Okay? And what you had there, this 2 o'clock hour was as nasty a Fed reaction as far as tradability is concerned as I've seen in some time. That is just pure confusion. You've got, you don't know what the next leg is. But it's going to be a significant leg, whatever it is, because of all this compression. You can see how the Bollinger Band just dove here and died and stayed dead. Plus, back here on the daily chart, you've got this extended box, which has got to be, I haven't counted them, and I'm not going to because I'm tired today. But, it's got to be at least, that's at least 20 sessions there. So you've got hourly mid coming down overnight here, trying to hold everything in. So you do this choppy one, then you have this one last desperate attempt to get back the monthly pivot and all this other stuff, and it dies. And you had a nice little follow through, nice little gap down into Globex. It lifts, you would expect it to. And now it's trying to hold hourly mid. It needs to break that Globex low. It needs to deal with this low from last Wednesday, convert the 50, and if that can happen, like I said when we were looking at the daily chart, then the bears have a serious look at being able to get to the 100-day or the 200-day exponential moving average down around 40.30. You've got enough fuel built up in these compression zones to make that work. So, what's the other side of it? Well, the bears suck. So, there's been a fairly persistent bid underneath a lot of this. And just when you think the bears are going to follow through on price, they don't. So we're short from up and around 41.50, this whole little zone here. We messed around with both sides of it here. Big pain in the butt. But we were there for the break, and we're still there, and we got, it's just a runner left, and I haven't even had everybody roll down yet because I don't want to leave too much on the table if they ring the bell this morning and they want to go attack this area. So what do the bulls need to do? Well, you got to hold that low from the beginning of Globex. That needs to be the next one of these. Spike low that holds. Create a higher low, get the hourly midband back, and somehow claw your way back up here. And when you get here, either today or tomorrow, you're going to have to finish above. You're going to have to finish above. If you do that, then, Fed comes out, rejection, just it starts to look like another dip buy, and then maybe you get another run at 4,200. But how bad have the bulls looked in and around 4,200? About as bad as the bears have looked at 4,100. So we need to figure out today, tomorrow, whether, are we going to break out of this 4,100 to 4,200 with some, notable exceptions to the upside and the downside, little box that we've been in. We'll see. Don't overtrade it. Don't make any assumptions. Take your profits where you find them. Don't get dug in. This is where you can get ideological and you can say, well, I'm putting a trade on. I'm not taking any profits. We're going down. I want at least X number of handles, and it's usually some idiotic number of handles out of the trade. That's not sound business decision making. Take your profits, let runners work. That's what they're for. But if the bears start to drop the ball, if they start to create higher lows and higher highs, whatever your bear thesis is needs to be adjusted to a thesis that's going to make handles, because that's what we're all here to do. It's more important than being right. Maybe this is the time we go down, but I'm a guy that likes to, I expect the market to do what it does. I don't run around expecting the market to do unexpected things. So, I'm set up for a move down. If it doesn't happen, I won't be the least bit surprised, and we make the adjustment. All right, that's all I got. Everybody have a fantastic day. Be safe, healthy, take care. Trade them well. Talk to you tomorrow.